So the topic for today's discussion is growth. Yes, we have been studying about growth since our basics of valuation chapter. And in that chapter, we had taken growth as a fixed percentage. We had taken growth to compute value of the share. We have taken growth to compute the value of the firm. We had been given the growth in the question itself. Okay. What is growth? Growth means year on year, we expect that our revenues will increase. Year on year, when our revenues will increase, a corresponding increase will also be seen in the value of the firm. So revenue growth, value growth are something which is inevitable and something which investors would definitely want, because if your company is not growing, if your revenues are not growing, then actually if they are constant, then they are not constant, they are declining. Why? Because inflation is increasing at a constant rate every year. So if on a bare minimum basis, up to the level of your inflation, your growth rate is not there, then your company is declining by the year. By the time company is declining, the value is reducing over the period of time if there is no growth in your company. So growth is an essential element of any company, any revenue, any value, because without growth, none of the companies can survive. Without growth, none of the firms can survive. Business cannot survive without growth. So growth is an essential ingredient. Growth is an essential component of any and every business. Similarly, guys, when I'm an investor and I'm looking at some organization to buy out, I'm looking at say value of that particular organization, entire value, or value of any share of that particular organization, I would definitely take care of whether growth rate is commensurate with the industry standards or not. I would definitely mind this fact, take care of this fact, because the growth which industry is expecting. So suppose if it is in a leather industry, okay, or if it is any other industry, which is a booming industry, and it is expecting a growth of say 8% per annum, then I would definitely expect my company in which I am investing, the shares in which I am investing, or the kind of securities in which I am investing, I'll also expect that my investment also grows to that extent, and that growth spree should continue forever. That is what I will expect from my share, from my company, or from. That is how growth is very, very important. And to compute growth, we need to be wary about certain formulas. We'll be discussing about certain methods. We'll be studying about certain types of growths, etc. in this particular topic called the growth. But before coming on to the formulas or types of growth or anything, let me tell you some basic fundamental about growth. How does growth happen? Growth can happen in two ways. Number one, you increase efficiency of your workers. You increase efficiency of your machinery. You increase efficiency of your operations as a whole. So when you are producing from the same set of machinery, from the same set of workers, if you are producing 1 lakh units in the previous year and current year you produce 1,10,000 units, that's growth. That's efficiency growth. Okay. So that is the first way in which growth happens. But the peculiar characteristic of this first way of growth is that this growth is finite. This growth is not unlimited. How much efficiency can you increase of your machinery or labor or processes? How much? To a certain extent, not beyond that. Efficiency is restricted. Okay. At max, what you can attain 100% efficiency, not more than that. Of course, attaining 100% is impossible because of normal losses, because normal loss would always happen. But still, the efficiency growth is limited to a certain extent. I mean, you can push your labor, you can push your machinery, you can push your infrastructure to a certain extent, okay, to reap good benefits, not beyond that. Therefore, the key point or key learning over here is that if you only and only rely on efficiency growth, your growth will be limited to a certain extent. Because guys, we want unlimited growth, okay? We want growth which is perennial, which goes on forever. And if we have a limited growth, if we know that, efficiency of our organization will only reap growth to a certain extent, then we might not be very comfortable in it, because we don't want a growth which will end in say next 1 year, 2 years, or 3 years. We don't want that kind of a growth. We want a growth that can actually continue for a longer period of time, and preferably over the entire period of our existence of our company. That is the kind of growth which we want. So how do we obtain unlimited growth? How do we obtain infinite growth. So guys, to obtain infinite growth or to obtain unlimited growth, we need to feed our business with more funds. We will buy new machinery, we will buy new infrastructure, we'll buy new land, building, etc. We'll purchase new factory, or we'll build up new factory, we purchase new assets, we expand our capital base, we expand our capacity, we expand our production thresholds, and that is how we are going to obtain unlimited growth. So a company which is having a good return of equity, the more you pump money into that particular firm, the more growing that firm will be. The more you pump in money in that firm, the more growing that firm will be, and it will be unlimited. I mean, there's no limit to it. As much money you put into that particular business, you'll grow, you'll expand, you'll gain profits to a very high level. So to obtain infinite growth, or to obtain growth for a longer period of time as compared to only a short-term growth, you need to pump in more funds. You need to pump in more capital in the business, and that is a fundamental growth. That will not be restricted to 1 year, 2 years, or 3 years. That will be growth which will prosper forever. That is known as fundamental growth. Now, to pump in money into the business is also difficult. Okay, not easy, because not everyone has surplus money, or not everyone is able to raise money from public or from lenders or from banks very easily. In that case, there's another strategy. Strategy is to retain the profits which we are earning. So of course, every business earns some profit. Okay, now that profit can be utilized in two ways. Either you can distribute it to your shareholders and say, oh, please make merry, enjoy yourself, we are declaring dividends to you. Either you declare it as dividend to your shareholders, or you tell them that, boss, we have some investments plans in the business, we have some expansion plans in the business. So instead of distributing dividends to all of you, we are retaining that money and we are reinvesting into business so that business can grow. And if your shareholders are they are trusting you, which more often than not they would, if they're trusting your decision, then they will not mind it. They will say, okay, don't give us dividends right now, or give us some portion as dividend, and major portion you can contribute as capital, reinvest as capital in the organization, so that you can reap benefits, so that you can reap profits from it. This is the second way in which the business can be swelled with money, funds. Of course, external sources of money or owners putting their money directly is definitely a good source, but this is a better source, guys, where the business profit is being reinvested into the business and expansion is happening, and that will lead to growth of the company. That is another way in which company grows. Funds are invested in the business and the company attains its full-blown size. That is another way in which growth happens. So yes, growth, fundamental growth, efficiency growth, fundamental growth, infinite growth, efficiency growth, finite growth. Growth can be easily ascertainable or easily demarkable by whatever we are retaining into the business. It is reinvested into the business, and what is the return of earning, which we will get through this reinvestment? Return of equity. Return on equity, whatever we are getting, that will be the reinvestment benefit that will attain from this particular business. So yes, that was the brief background, theoretically, of a concept called growth. Now let us understand what do you mean by growth by definition, and then let us understand what are the formulas which are used to calculate the growth. Okay. All right. So growth means growth means process of increasing in size. Whenever you increase in size, okay, then growth happens. Whenever your size increases, whenever your firms get swelled up, whenever it increases in terms of its infrastructure, in terms of its capital, in terms of its departments, in terms of its processes, whenever it swells up, whenever it increases, it's known as growth. And growth can be multifaceted, guys. Revenue growth, market share growth, growth in the size of the earnings per share, dividend per share, launching new products in the market, conglomerate growth. So growth can be multifaceted. So whenever you increase in size, whether your products are increasing or your services are increasing or your revenue is increasing or value of your firm, enterprise value is increasing, EBITDA is increasing, everything is counted under growth. So if one growth parameter starts building up, then the entire ecosystem of the growth starts building up. So it's just that one parameter is to be built up, one parameter is to be elongated, and then entire chain of the growth parameter builds up. So growth means process of increasing in size. In the economic terms, it means anticipated progressive increase in capital value. So if there is a anticipated means expected, anticipated means expected, we expect it in future. Growth is always future oriented. So it is the expected progressive increase in capital value. Progressive means it has got an increasing trend, it has got an upward trend, increasing trend. It's a progressive growth, increase in the capital value and income. So the capital, your capital which you have invested in the business, that increases, and thereby your income increases. So it's a progressive increase in the capital value and the income. The bare minimum expectation of growth for every company is to grow equivalent to the inflation rate. The bare minimum growth rate should be equivalent to the inflation, guys, obviously. So the bare minimum expectation of every business is to grow up to the limit of inflation at least, because if the economy is swelling up, if the economy is increasing at the rate of inflation, if the expenses are increasing for any business, for any the resources, cost of resources is increasing in the business, if the revenues do not increase with a corresponding level, then of course the company will be at a declining trend. So the bare minimum expectation of growth is to grow at least up to the level of inflation, so that the increase in expenditure, increase in the infrastructure cost should be commensurate with the increase in revenue. Now growth may be attained in two ways. Fundamental growth. So growth can be of two types. It can be the fundamental growth, which is increasing the capital base of the company, which is infinite growth, which is infusing more funds in the business. Whenever you infuse more funds in the business, whenever you intake more capital in the business, more funds in the business, that is fundamental growth, which is infinite in terms of its increase. It will be unlimited in terms of its increase, which is infinite growth. And second is the efficiency growth. Efficiency growth means it is increasing the efficiency of the operations. I will try to make most optimum use of my resources. I will use my raw materials very, very carefully. I will use my labor very, very efficiently. I will employ them wherever it is required, wherever it is required to be employed. So I'll do all this thing very, very efficiently, very diligently. I'll be putting in my resources very efficiently. I'll be using my money. I'll be using my infrastructure. My everything will be used very, very delicately. So increasing the operations, increasing the efficiency in the operations, increasing the profitability in the operations, that is the second kind of growth, which is efficiency growth, which is increasing the efficiency in the operations. This is a finite growth, because efficiency cannot increase beyond a certain point. Okay, this is finite to the extent of efficiency which we can attain. This means that a company has to not only reinvest a lot. So capital, it's not only that capital should be reinvested in the business, but also it should be reinvested well, which means it should be reinvested in a way that returns are maximized. Just reinvesting capital is not sufficient. So fundamental growth and efficiency growth are also linked to each other in some way. So you pull in money, but your efficiency is declining, your money will be wasted. So it's not only important to reinvest capital, reinvest money in your business, but also to reinvest it well, to invest it in proper way, that efficiency is increased. Profitability will increase only when efficiency increases, only when the skill set of labor increases, only when the the efficiency of labor will increase, only then the overall profitability will increase. The efficiency growth is somewhere linked to fundamental growth. But guys, in this entire chapter, we'll primarily be focusing on the fundamental growth. We won't be focusing on efficiency growth, because the questions which we'll do of growth, that will be focused on where the amount which we earn, that is reinvested in the business, increasing the capital base of the business, and thereby increasing the growth of the overall business. So we'll be focusing on fundamental growth in this entire chapter. In this chapter, we'll focus on the former. Former means fundamental growth. Okay, sir, got it. Now, okay, a simple example to explain how growth works. Okay, how to compute growth, how the growth amount is computed. A simple example to explain this concept. A company has the following earnings in 2 years. Company has the following earnings. It has two years, year 1 and year 2, and it has earnings. It has rupees 1000 lakh has been invested. It is the initial capital which has been invested. 1000 lakh has been invested initially, and the company is giving a return of equity of 12%. Okay. Now 1000 lakhs multiplied by 12% is equal to 120 lakhs is the total earning of year 1. Year 1 total earning is 120 lakhs. Okay. Year 2, you are having the same capital base. Okay, 1000 lakh is the same capital base which you had infused in year 1. That will give you 12% return. In addition to it, we are reinvesting 100 lakh rupees out of the income which we have earned in the first year. The income which we have earned in the first year is 120 lakhs. Out of this 120 lakhs, we will reinvest 100 lakhs back into our business. When we'll reinvest 100 lakhs back into our business, then this 100 lakh which we reinvest back into our business, that will again yield us 12% of return. So we will have two returns in year 2. Number 1, the return on the original capital invested. Number 2, the return on the retained profits of last year. Return on the retained profits of last year. So this is the initial capital which is invested. So return will be two-faceted in second year. It will be first on the initial capital which is invested, and secondly it will be on the retained profits. Out of the profits which we have earned, whatever has been retained in the business, which is 100 lakhs, on that retained profit we'll also earn profit. So we have double profits in the current year, which will total up to 132 lakhs. So 120 lakhs plus 12 lakhs is equal to 132 lakhs is the total earning that we can expect in our year 2. So growth in earnings, what will be the growth in earnings from year 1 to year 2? It will be 132 lakhs minus 120 divided by 120. Okay. So increase in terms of percentage, increase in terms of money is 12 lakhs. 12 lakhs increase in earnings. In terms of percentage, it will be 10% because 12 lakhs divided by 120 lakhs is equal to 10% of return on equity. So the growth will be 10%. The growth will be 10%. Return on equity is 12%. Return on equity 12%. Growth is 10%. That is how we compute the growth percentage. Now, I'll again make you understand this particular growth rate, how to compute this particular growth rate by way of a formula. Now we'll be converting into a formula. The result will obviously be the same. The formula will be a little different. What is the formula of computing growth? Formula of computing growth is P multiplied by ROE. P is the retention ratio. Retention ratio. How much have we been able to retain in our business? It is the retention ratio. And ROE is return on equity. This is the formula which we use to compute growth rate. So will it yield the same growth percentage as we have computed over here? Of course, guys, it will. This is the long method of computing the growth rate. This is the long method. Now we'll be computing it in a shortcut method. And the formula should also be very clear to you. Whatever we retain in our business multiplied by the return that it will give us, that will be the growth. Whatever we retain in our business multiply by the return which my business is giving to me, that will be the growth. So retention ratio is, what have we retained? Retention ratio is 100 divided by 120. Out of the profit of 120, we have retained 100. So retention ratio is 100 divided by 120. That is the retention ratio. So 100 divided by 120 comes out to 8.3333%. That is the retention ratio. And what is the ROE of this business? ROE is 12%. ROE of this business is 12%. So I will multiply 12% by 8.33333333%. Okay, comes out to 10%. Comes out to 10%. So whether you use the formula or use the long cut, the result will be the same. The growth percentage will be computed in this particular manner. 10% is the growth rate in this case, using formula as well as the long cut method. If you computed using this calculation, then also 10%, and the formula again 10%. So I'll be using formula in my questions henceforth, which is retention ratio multiplied by return on equity. That will be the formula which will be used for computing the growth percentage. Okay, so got it. This is the fundamental growth. In case the percentage return on capital increased from 12% to a higher number, it would be known as efficiency growth. Now suppose the the growth rate. So I'll ask you a question, okay? Then I'll explain this particular line. Okay, I'll ask you a question. What is the maximum percentage of growth that can be achieved in this particular scenario when your retained earnings are reinvested in the business? What is the maximum rate which can be achieved in this particular case? Now it is 10%. Can I achieve 11%, 12%, 13%, 14%, 15%? What is the maximum growth that we can achieve using this formula or using this technique? Fundamentally, what is the maximum that we can achieve? Guys, maximum what we can do is we can reinvest the entire capital of our business, of entire profit into the capital of our business. That's the maximum which we can do. So 120 over 120, which is 100% of 12%. So the maximum growth that we can achieve in our business is 12%, which is the return on equity. If we reinvest our entire profit into the business, then we can maximum achieve the growth rate of 12%, which is equal to the ROE, return of equity. Whatever is the return on equity, we can at max attain the return of equity as our potential growth, because maximum retention ratio can be 100%. 100% multiplied by ROE. ROE is constant, 12%. Maximum growth which we can achieve is 12%. Now, your question will be, sir, you said that fundamental growth is infinite. Yes, I said that fundamental growth is infinite, but infinite in terms of time period and not in terms of percentage. Infinite in terms of time period. It will be accruing, growth will be accruing to me for a infinite period, infinity. It is infinite from perspective of the time period, not with perspective of the percentage. Percentage will remain constant up to the extent of ROE which you have in your business. ROE is 12% in our case. So growth is infinite, but with respect to the time period. Unlimited years, the growth will be there. Unlimited years, the growth percentage will be obtained. That is the fundamental idea. So that is how our growth is calculated. That is how growth percentage is calculated. That is how the growth formula is to be read. Okay, because in the examination, guys, you won't be required to analyze the growth percentage or analyze anything. You just will be required to compute the growth percentage, which will be computed using this particular formula. And now let us study the last line. This is fundamental growth in case of percentage return on capital increased from 12% to a higher number. Suppose if the growth or the growth percentage is increased from 12% to a higher number, it would be known as efficiency growth. Now, if you tell me that, sir, we are having a growth of more than 12% in our business, I've told you that you cannot grow more than 12% in your business, okay? That's the maximum growth which you can attain in your business, okay? You tell me that, no, sir, this year we have grown more than 12 years in our business. Then I will tell you that your efficiency has also increased along with the fundamental growth. So it will be a sum of two growths, fundamental growth and efficiency growth. So I will tell you that your efficiency is also increased and your profit which you have earned, that is also reinvested in the business. Both combined together has given you the leeway of higher growth, and that is a combination of fundamental growth and efficiency. And that is how growth plays around, numbers play around. But in our examination from our subject standwise, from our examination standpoint, we will never discuss efficiency growth. This is just for theoretical discussion purpose, for your knowledge, FYK. Just for your knowledge that we have discussed this efficiency growth. Otherwise, you are not going to discuss efficiency growth at all in our entire practical portion. Okay, sir, got it? Alright, so next is a DIY, do it yourself. Again, not a exam type of a question. It's just a question which will be useful for your knowledge, for your common understanding of this concept called growth. So DIY. Fundamental growth is tied to how much a company reinvests back into the business. Fundamental growth means how much a company is reinvesting back into the business, how much a company is actually investing into the business, whatever profit it has earned, how much of it is reinvested in the business, that is the fundamental growth, and how well it reinvests. So efficiency is also a part of it, that it should reinvest well. A company reports after-tax operating income of 75 million. So company has a after-tax operating income of 75 million on revenues of 1 billion. Okay, it's not actually revenue, it is on capital of 1 billion. So company has a capital of 1 billion and it has earned income of 75 million on that 1 billion capital which has invested into business. thus getting a return on capital of 7.5%. So the return on capital is 7.5%. It does not plan to reinvest in new assets. It is not reinvesting in new assets, okay? But will maintain existing assets and its current return on capital. So current return on capital will be maintained, but it will not have any new assets. It will not purchase any new assets, which means it will not it doesn't have any plan to reinvest into the business, doesn't have any plan to grow its business. Now what out of these, what is the best option that you can choose? Company cannot grow. Company cannot grow. Number 2, company cannot grow in short term. Company cannot grow in long term, or the company will shrink. It will squeeze. By time it will surrender to demolition the value. It will squeeze. What is the best option out of these 4? Sir, we feel that all are the best option. Yes, I can understand the confusion in your mind. So we feel that it cannot grow. Yes, true. It cannot grow in short term. True. It cannot grow in long term. True. And it will squeeze also. True. So we feel that all 4 are absolutely correct. We feel that all 4 are absolutely correct. Guys, no, all 4 are not absolutely correct. All 4 are not absolutely correct. You have to choose any one. Any one you have to choose. Which do you think is the best alternative out of the 4 alternatives which are given in this particular question? Okay, let's analyze. Now, the first statement says the company cannot grow. This statement is incorrect, because there is some level of efficiency growth which the company will definitely be seeing. There will be some level of efficiency growth. I agree, fundamental growth will not happen. I agree. But there will be some level of efficiency growth which the company will see. And that will be super beneficial for the company. So to say that the company cannot grow, incorrect according to me. Incorrect. The company can grow to the extent of efficiency. Second, the company cannot grow in short run. In short term, the company cannot grow. Again, incorrect, because efficiency growth happens in short term only. What is the feature of efficiency growth? It happens in short term. It happens over a smaller period of time. It happens over a very, very truncated period of time. So it happens over a short period of time. So efficiency growth happens in short term only. Efficiency growth doesn't happen in long term. So the second statement is also incorrect, that the growth will happen in short term. Third is that the company cannot have sustainable long-term growth. The company cannot have sustainable long-term growth. This is the correct answer. Guys, it is impossible that the company has sustainable. Sustainable means over a longer period of time. Over a longer period, which in our terminology means infinite, okay? Infinite. So yes, this is very, very true that the company cannot have sustainable long-term growth. It cannot grow over a longer period of time sustainably, which means, efficiently. It cannot consistently grow over a period of time. That is the correct option out of these 4 options. Company cannot grow sustainably over a long period of time. Company can grow in short term because of efficiency growth. Company can grow. Cannot grow is also incorrect. Company can grow, but it cannot grow over a longer period of time, and that too sustainably, that too consistently. So the correct answer is C. The company cannot have sustainable long-term growth. So the answer is part C. So please write the answer in the space which is given in your book itself. Write the answer. Solution is part C. The company cannot have a sustainable long-term growth. The company cannot have a sustainable long-term growth. And write an explanation also, because guys, explanation is important. In case the company does not reinvest, additional capital, comma, it may still have some growth due to efficiency. It may still have some growth due to efficiency. Full stop. However, this growth will be in the short term only. However, this growth will be in the short term only. Full stop. efficiency growth is finite growth. Efficiency growth is finite growth, comma, and hence it cannot increase, and hence it cannot increase beyond a limit, and hence it cannot increase beyond a limit. So the point over here is that, you know, fundamental growth is the growth which is long term, which is backed up by you know, adequate long term repercussions, adequate long term returns. So if you want a long term growth, if you want something which is more stable, more long term, then it has to be the fundamental growth. And what is the formula? Ultimately, the entire conclusion boils down to the point that the formula for computing growth is P multiplied by ROE, which is retention ratio multiplied by return on equity. That is the formula that we are going to use in our questions which are related to growth. So, okay, FYK, there's something else for your knowledge. What is the maximum growth which a company can obtain? So, what is the maximum growth which a company can obtain? So, guys, the retention ratio can at max be 100%. So the maximum growth which company can obtain is its return on equity. Whatever is the return on equity, that can be the growth percentage. So that is the maximum growth which any company can obtain. The capital base of a company may either be increased by infusing fresh capital or by reinvesting the existing profits instead of distributing them to the shareholders as dividend. So the capital base, there are two ways of expanding capital base: additional capital infusion. Second, reinvest the profits which we have existingly on. Yes, sir. When the shareholders choose to sacrifice the dividend consumption today, they reap benefit of growth tomorrow. Following formula may be used to compute growth, which is B multiplied by ROE, retention ratio, whatever has been retained, multiplied by the return on equity. That is the formula which we use.